Hey, welcome to Mullen Stock. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never missed any of our uploads. And also remember that this is not a financial advice video. Today, I want to tell you everything you should know about it. So after Friday, 2 documents were submitted to the SEC, an 8K and a prospectus. Historically, whatever Mullen submitted to the SEC after Friday was not always good. Therefore, once again, this was initially a red flag. But if you look closely, I'll explain it in a simple way. This prospectus is the 8th update to the originally dated prospectus of February 14, 2023. It includes 103 million common stock shares. Finally, this will be registered for warrants. I can try to explain this prospectus in one sentence, but there are other things in this document that have happened recently. When it comes to the original prospectus, it's only for the warrants that have been troubling Mullen continuously. And without a doubt, when the stock price falls and when these warrants are converted, more shares are needed. The stock price has fallen so much that they have to register more shares to accommodate the previous warrants. So you understand this prospectus is still dilution. Yeah, there's nothing new about this kind of thing. So once again, this is a bit of an easier explanation. Finally, there are other things here that I want to explain to you in detail, which I will go over. So in the end, it's written here that warrants can be exercised upon issuance and are valid for up to 5 years from the date of issuance. Again, this is not new information, so I just want to say this. Some things may be common knowledge. I just want to shed light on it for you. So, if you're not aware, authorized shares remain the same after every reverse stock split. I understand that most long-term investors who may have gone through 2 reverse stock splits already know this, but new investors who might be new to Mullen may not be aware of this. So perhaps if there is another reverse stock split in the pipeline, authorized shares will remain the same. Just remember this. But I said that there is some new information here, and here it is. So as of October 25, 2023, we had 311 million shares. According to the recently published prospectus, 287 million were outstanding. Since both of these documents have been submitted, it is clear that there has been dilution, which people don't like to hear. But there are other concerns as well. As you can see, there is no Series D in terms of all voting power. When I saw this, I thought it was quite good. David had said that he would conclude all preferred D-class shares, and he was leaning in that direction. Regarding dilution, he was only issuing preferred D-class shares, as if they were hotcakes, which converted 1-to-1 basis into common stock and also gave warrants that completely dried up Mullen. But according to this new document, it is strangely stated that 363,000 shares are Series D convertible, which can be converted into about 1,600 shares of common stock. So this is not better. It appears that preferred D-class stock is still present. So once again, I just want to shed light on it. And it is written here that if all the warrants mentioned above are fully exercised in cash, the proceeds will be about 61 million. But this doesn't mean that Mullen will earn those 61 million, because all the warrants are actually cashless. So remember something, and this is a common point that is repeatedly mentioned there. You can see that in the previous update or in this one, the Third Amendment is also there. Looking at the use of proceeds, there too, the same words are written, as if Mullen will receive 83.25 million, but those are cashless warrants. So again, this doesn't mean that Mullen will earn 61 million. It appears that most people will not earn even a single rupee. Therefore, this is not a good option. Furthermore, they have mentioned that if they receive any money, it will only be used for working capital. Nevertheless, remember this fact. I've also highlighted it. Therefore, since Form 14A was submitted, it was meant for 9.9 acquires, and now it appears that it's 2.7 and 3.7. When we see that the stock price has been so volatile for the past 2 weeks, we now understand that insiders were selling, and this is essentially what I was saying. In reality, I made a point in which I said that it is clear that, especially, they were diluting, and this was only because they could reduce the 9.9. In this way, they can easily and then dilute again, because when they dilute 2.72 will obviously rise to 9.9 again. Therefore, this is not good, but the explanation behind this is that there is more suppression. In addition, according to the footnotes, it does not explain the true level of dilution or the amount of stock that they had as warrants previously. Therefore, they were selling something again, diluting and then essentially selling it again. According to this, you can see it according to the basic Form 14A of this document. Therefore, once again, it's not good. And in most of its parts, as I summarized at the beginning, the stock price has fallen so much that now there is a need for more common stock to accommodate these warrants. Nevertheless, an attempt is not just being made to spread FUD. This is not an dilution. These are the same warrants that have not been fully exercised before. But now they are registering in the hope of 103 million shares to be exercised. So remember once again, and now we know that on the 25th, there are 311 million outstanding share counts. So these were some good, bad, and ugly aspects. The rest of the decision is up to you. Guys, that's all we have for you today. What is your opinion about Mullen stock? Get involved and let us know in the comments down below. Thank you for watching.